Good evening. Ira Epstein, and here we are with your Stock Spider ETF market wrap-up, and this is for Thursday, the 24th of October, 2024. All right, so the event of the day had to do with the stocks that starts with a T, and we'll call it Tesla. Oh, $46 gain on a stock that's now $260. So this market was up 22% today, and it took the stock from being a loser for the year and put it temporarily back in the winner camp. Obviously, Mr. Musk did a great job of selling ideas yesterday, showing where the money is. Now his energy company's making money. That battery storage is working out. You know, it's a shame that what didn't work out, and I wish it would work out, are those shingle ideas that he had. They're just too expensive. And having a home with a beautiful shingle that acts for that, the idea is brilliant, as the man is, but he hasn't been able to really get that going. I wish that there were a way to do that, because I hate looking at those big panels when you're traveling around. I think people don't think they're that pretty. They're efficient as can be, but the shingle idea? And, you know, as we look at some of the other markets, you came back in Amazon today. Netflix came back. Home Depot up a little bit as well. AMC, well, still stuck here in the fours, not going very far. I hear they're doing something different. They're going to try to make these theaters now a different type of experience. You know, if you try enough things and you go through enough money, sometimes you can hit a success. I'm not betting on it. Uranium came back a little bit. Be careful of that one right here. And Rivian, you know, when it lost its bearish embedded reading, I was betting that the market would come back up, and it did its job. So what about news tomorrow? Well, we don't have a big day of news. You're going to get, by the way, that was, maybe we should come there because I think that's important. This was today's initial claims. I didn't understand the down 15,000. To me, I'm probably so wrong on this. You had the hurricanes. I would have thought that number would be showing up. It's not. The continuing claims are going, they're near 1.9. That'd be a level we haven't seen in a while. All right, so that's important. Tomorrow, we're going to get advanced durable goods data at 7:30, and the final, and the word is final, not the prelim. The prelim's where you get the action. From the University of Michigan Consumer Sentiment, unless this number's a big miss, they're looking for 69 versus the prelim figure of 68.9. That would just be a confirmation number. That's the way that I look at it. I am going to be gone next week for 5 days. So Monday through Friday, I am taking some personal time for myself. I will be back, though, to do the weekend edition for you. So I'm getting back into town on Saturday so I can get a lot of work done for people. So, you know, I figured what time to take before the end of the year. I want to be here for the Thanksgiving market with family. I want to be here at Christmas. I want to be doing these updates. I want to be for year-end trading because it's always exciting. And the week before the election, probably the best time that I could take a little bit of time off. I've made all my predictions as to what I thought the pre-election would do. I did some real reports for you. Then we've got the post-election, and that gets very, very exciting. All right. So I'll put up some videos so you get to see them, but I'm not going to try to do videos from the road, and I just want to wash my mind for a few days. For my subscribers, you will get from me my normal emails with what to do in the market, both in the futures and the Spider ETF. Won't leave you high and dry because I'm not going to look at the markets. I just am not going to sit in front of a screen. I'm going to go out, enjoy myself, have lunches, dinners, and you know, what people do. All right. Let's just go to DWPCF. This is where I think the trade is trying to make a stand. We're at a price here that when you take a look, you've got higher lows, higher highs. This has been the corrective mood. I think the market's going to try to hold the 18-day average of closes now. When you look at where the market stalled out against the upper band, if you don't learn how to work with Bollinger Bands, you are so missing the idea of where natural resistance and support levels come in because of the algorithm. And when the market corrects often, where does it retrace to? I teach you all that in my course, which we'll talk about at the end of this. When you lose the bullish momentum, And you saw me predicting this with you the other day. Often what happens, is you will lose the embedded reading, be it bullish or bearish, before the market makes a run to one of the major averages that I teach you about. Now, in this case, it's literally on it, but it's still, I think it's going to hit it. And this happened on Tuesday. Kaboom. Now, that's where you generally start the battle, all right? And that's why today you're fighting this right through there. When we come to Qualcomm, all right? Qualcomm's not had an embedded reading, but what it's been doing is traveling between the lower band, basically the upper band. The upper band's back to the 18-day average and giving you a lot of sideways action. I don't see a big trend to trade in Qualcomm right here. You know they're in that lawsuit with ARM. We'll see how they do. Today, both of the stocks have a little bit of a reprieve. We'll see if they can work something out. In CrowdStrike, did I not say that I thought the market would make a run back into this average, and that's where the battle begins, and that's exactly what I think. This wasn't the hardest call in the world to say it would get back here and fight in the 200, the 18-day, and the 100-day moving average, and that's what it's doing. Uranium, be careful. You lost the embedded reading. Before you go up here, I predict price and the 18-day average will come together. So let's see if I'm right on that. I could be wrong, but let's see if I'm right. I'm still not bullish at all on K-Web. First off, even if you had a buy signal under the 18-day average, it would be no more than a short coverings deal. When you lost the bullish reading up here, you can see where that ties in. The game was to go to the 18-day average. Interestingly, it didn't. It went under it and never has fought at it. Now, if this is going to be a true demarcation point and the market now embeds, let's see, both numbers are under 20. And this is what I teach with in my courses. Come on, will it not let us do this? Doesn't want to let me do it. But if you have your embedded here, then you're probably coming here before you lose the embedded reading, and you'd have to get over these numbers to do that. Don't know why that wouldn't do it. Let's see, is this one going to let me do it? No, for whatever reason, it's not going to let me go back and forth. Toll Brothers is basically gone from the upper Bollinger Band to the lower Bollinger Band, and it wouldn't surprise me if you get back here. Now, we saw today that new home sales took a jump. Why? Because companies like Toll Brothers have the ability, as you walk in the door, to say, listen, I know you need the home, mortgages are high. Instead of you having to go to 6.5% mortgage, what if I can get you down for the first year and a half to 5%, 5.5%? You go, oh, that's terrific. Or you go, no, I don't need that, but boy, that mortgage is going to stop me from getting some upgrades. Let me tell you what we can do for you. We'll give you some upgrades. Now, Toll Brothers may not be the only one, but these companies give perks. And you're in the driver's seat for those perks if you're building a new home. You're not going to get that from an existing home buyer. They're just going to deal with price on you, and what you get is what you get. When we come over to the home builders as the ETF, the same pressure. 6.55%, about where you're at right now on a mortgage, shuts the markets down for the average person. I mean, just going from 6% on a $500,000-$600,000 home to 6.5%. If you add it up, it's $500-$600. You know, it stops the monthly payment. The guy starts going, I can't afford that. You've got to get this going the other way, and the Fed hasn't been very useful in it. Yes, they cut rates. It had no impact on the market. The economy's very strong. In the financials, are you going to lose the bullish embedded reading? Now there, see, I got it to work, is the question. Now watch this. Here we are, today 78.49. You weren't embedded anyways. You were here, not quite there. I'm going to come back and walk you through this. Here we go. Both numbers over 80, both over 80. Both over 80. This is what I'm going to teach you how to work with. My slow stochastics will not match up with yours. You're going to want my formula for that in order for it to work for you. But when you get here, you're still embedded. You start losing it. if you're down again, watch out, 78.49. Unless the market re-embeds, and this was today, the odds favor that you're going to go back down here before you take out this high. So tomorrow's going to be a super interesting day to see what happens. We'll see how that works out. XLI, once you lost the embedded reading, the game went to the 18-day. That's now the question. Is it going to continue on? If it does, 133.75 resistance, 137. XLE. As we were up here and we started coming down, I said, look for the battle between these key averages. It's going to be hard to leave them. Well, you have been there now for 1, 2, 3, 4, 5, 6, 7, 8, almost 2 business weeks. That's quite a bit. And you haven't been able to do much, but that's the reason. You learn to take off the name of the chart. That's so darn important. I teach that in my full charting course. Take the name of the chart off. And that's because you're thinking when you see the name of the chart. If you don't know the name there and you look just at the pattern, everything starts fitting in. I learned that so long ago, and it makes such a darn difference. In gold, I don't care if it corrects a little bit. You have an embedded reading. I'm just one thing right now. Until that red line's under 79, I'm bullish, looking for higher highs. That isn't translating, by the way, just yet into the miners, by the way. Silver never did embed. And now the market's got a huge outside day to the downside. The downtrend won't go anywhere if today's high is taken out, in my opinion. So whenever you get a move like that, it's generally a pause in a bull action and what it's going to do with it. Now, if it takes out today's high tomorrow, I think you're going right back to the Bollinger Band, and the market will say, well, that was a quick reaction, but it never did embed. It just overbought. It probably needs to consolidate that. I'm still not friendly in the copper market. It's going to take China to come to life and do something. Bonds and notes, you have bearish embedded readings. So far, these are bounces in a market that are bearish at this point. The dollar, a little correction setting in. Close under 79, and for the moment, you lose the bullishness. I won't get bearish because you're so far over the 18-day average, but you might be getting a correction to it unless you re-embed or do a new price action. And the flip-flop would be true of FXE, which is flirting with losing the bearish reaction to it. Tomorrow's going to be important in the currency markets. So with that, as I said, what you want to learn how to do is what? You want to learn how to trade the ideas as we go through them. I'm just showing you how I work everything else through there. And how you do that, learning Bollinger Bands, learning momentum. So as you want to learn that, how do you do it? Well, take a look at this. Give yourself 30 seconds to a minute. Take a look. Look at the course. You'll see what it is. It includes this charting software, so your stochastics will work right. It includes my access to my morning subscriber videos where I hammer this into you. So you see history, you see how to do it, you can bring up any charts you want, and then away you go. I'm Ira Epstein. You have yourself a great day, and I'll talk to you all in the morning. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.